All right. So welcome everybody to the Family Network Financial Workshop. My name is Arabian Morgan. I am a certified public accountant. Some people just refer to that as being a CPA. But I always like to put people at ease when we first begin these workshops. I have nothing to sell you at the end, okay? So don't think that I'm gearing up for some big sales pitch of some sort. I don't have any books, tapes, CDs, documents. I don't want to do your taxes. I don't have any investments or insurance or anything like that to sell you. So just be at ease. We're just here to learn today. And today's topic is how to keep your FICO score permanently high. All right, permanently high. Sometimes we refer to our FICO score as a credit score. And the reason I titled it this was because if I just titled it something about debt, people don't show up. But I know if I say, let's talk about your improving or keeping your credit score up there, you'll show up. So I really appreciate you guys coming. So I do want to touch on a number of areas today surrounding our credit score, but I will spend quite a bit of time with the credit score itself. And I just want to start off with, why do we want to keep our credit score high? That's always a good question. Why do you want to do it? And it's also a cautionary thing about keeping your credit score high. What I found is that having a high credit score allows you to do three things very well. Number one, it helps you get some really good insurance rates, like for car insurance. Having a high credit score will help you with that, especially here in California. I'm not sure about other states, but in California, it absolutely helps you get some of the best car insurance rates. Now, your credit score having anything to do with your ability to drive or how well you drive, I don't know what the connection is, but I do understand that that's how some of our car insurance rates are based. So that's one thing. Another thing, it helps you to rent or find special senior housing if your credit score is high. All right, so just renting an apartment, or if you're a senior, getting into some of those senior living areas, they check your credit score, and if it's really bad, they don't want to have you move in. So that's another thing. Now, this third thing that having a high credit score helps you to do isn't so good. It helps you to go into debt really fast. It really helps you go into debt really fast, having a high credit score. But that shouldn't be a deterrent for us for having a high credit score, because there's good reasons to borrow money or go into debt, and so I'll touch on that today. But I do want to emphasize, when you have a high credit score, everybody wants to loan you money. And that's not a good thing, because the more money, we'll learn later, the more money you borrow, the lower your credit score starts to go. But it's just one of those things. It's like I don't want to call it a catch-22, but it's just fascinating that having a high credit score, everybody wants to loan you money, which drives down your credit score. So we want to talk about how to keep your credit score permanently high. We also want to talk about when is a good time to borrow money, when is not a good time to borrow money. We also want to talk about how to get out of debt. And some of this you'll just have to be sharing with your relatives and other loved ones, because it may not apply to you, but it's good information for you to share. So let's just start off with what I'm going to call your FICO credit score, your FICO credit score. A lot of people talk about getting a credit score or looking at their credit score, but they're not looking at the important credit score. The only important credit score is your FICO credit score, FICO, F-I-C-O. It stands for Fair Isaac Corporation, all right? They're kind of the company that has a lock on, people checking in with them before they loan you money or let you have some credit with them. There's other credit scores that are called Vantage scores. They go by several other names, but they're not as important. So I'm really not focused on all those others. I'm only focused on the FICO score, all right? Now, the FICO score is kept track by, there's three major credit bureaus that want to really keep track of your credit history, as it were. And so you can always get your credit report from them. and I'll talk about how to get it for free from them in a little bit. But this would include Equifax, Experian, and TransUnion. All right, these three major credit bureaus. And they all have different credit scores for you. Even though it's just you, all three of them report a different credit score, you know, whenever they're asked about it. So I want to start with the fact that your FICO score, there's actually 28 different FICO scores that you have. 28. So there's a different FICO score depending on what type of money you want to borrow, or what type of money that is loaned to you that different companies will check for. For example, if you want to buy a car, there's actually a specific FICO score for the auto industry. So the auto industry, they want the auto FICO credit score. But there's 28 of these things. So I'm just going to lay down a blanket thing here and just say if your score is over 700, that's where you want to be. That's where you get the best lending rates around, as long as your score is over 700, okay? So when I refer to you keeping your credit score high, meaning I want you to keep it over 700. Now, if you keep it over 740, that's just like an atmosphere of very few people, okay? But 700 usually gets you to where you need to be, all right? But there are 28 different FICO scores. So I'll start with how can you check what your score is right now. There's only one place that I know that'll give you, that you can get your FICO credit score. You're going to have to pay for it. The name of the website, or the website address, is myfico.com, myfico.com. You don't have to sign up for a subscription or whatever to keep checking your credit score. That's not needed. They're going to want you to do it, but don't do it. I would say if you really are interested, you pay for one-time access to look at your credit scores from FICO, from this FICO company, all right? And that's it. You don't really need to keep checking it. You may want to stay up on your credit report, though. You may want to know what's in your credit report. So of the three major credit bureaus, Equifax, Experian, and TransUnion, you can get your credit report once a year from them, each one of them, for free, okay? Once a year, you can get one credit report from them for free. Not your credit score, your credit report. The credit report keeps track of, or it's going to list out and detail out what money you've borrowed from different institutions. It'll say what credit lines you have available to you, even if you're not using them. It keeps track of any payment histories you've had. Certainly for, up to 13 years, it's going to keep track of those things. If you file for bankruptcies, had any judgments against you, if you have any lawsuits against you, these can all be on this credit report. If you've ever been evicted from an apartment or something like that, and a judgment was placed on you, this will be on your credit report. So here's where you go get this credit report for free online. It's annualcreditreport.com. Annualcreditreport.com. You don't have to pay for anything. However, those three credit bureaus are going to try to get you to sign up for some service where they're going to monitor your credit or pay you, or have you pay them just to keep checking in with them throughout the year. Don't pay for anything. Just get your one free credit report each year and leave it alone. But yes, they are going to try to sell you stuff along the way. Just keep saying, no, I don't want anything else. Just give me my credit report. But you get one from each of those three credit bureaus. Now, having that information, just what's on your credit report and what is your current score, that's good enough. In fact, I would tell you, don't even worry about what your credit score is right away. Just get the credit report and see what's on it. You'll want to go through and check it to see if anything on there is inaccurate. If there's anything inaccurate on there, there's a method, there's a process for you to challenge what's on there. Now, I think personally it's unethical to start challenging stuff that you know is accurate, you just don't like it. But if there's something inaccurate, you should challenge it and it will get removed. Now, it's a process. It does take time. When I see people talk about fixing their, you paying a company to fix your credit for you, they're not going to fix your credit the way you think. One, they're going to charge you a fee. So I don't know what that fee is. You got to check with the different companies, or if you're really interested in it. But what they're probably going to do is repair your credit. There is something you can do to repair your credit for less than a 3-week time period. And in 3 weeks, all the bad stuff comes back. So I'm not talking about any of that today, because I'm not part of that industry and what they do. I don't necessarily think they're of value at all. But what I do want to do is tell you how to keep your credit score permanently high. And there's several ways, there's several things you need to actively do in order to make this occur. So let's talk about how the credit score is actually put together. Okay? How is your FICO score determined? 10% of your FICO score is based on you opening up new lines of credit, meaning actively trying to open up different credit cards or borrow money. Every time you do that, 10% of your score is affected by this. It's affected negatively by this, 10% of it. So what you're going to want to do is only open up new credit or apply for new credit, apply for new loans sparingly, only as needed. Don't just go out and apply for a bunch of credit. It's going to make your score drop if you do this. So I like to look at it this way. If within a 12-month time period, I'm only going to, if I need to, I'm only going to try and open up new credit or borrow money once during a 12-month time period, okay? And that way it's not such a big impact on my credit score. And I guess I should say my credit score is really high, okay? It's really high. But remember, all my high credit score allows me to do is, because I don't need to rent. I don't need to rent any place. I'm not old and trying to move into an old folks home. The only thing it really helps me do is get some good car insurance rates, and I have the ability to go into debt really quickly, all right? But I have a really high credit score. It's over, my credit score is probably over 750 at this point. Dare I say 800. I just say 750 because I know it's there, but hitting 800 and stuff like that, that's, it just depends on how the wind is blowing. If you're over 700, you're good though, okay? All right, so I borrowed money on a car loan 2 months ago. That's probably the only thing I've done in the past 12 months. All right, actually probably in the past 24 months. So my credit score was not really negatively affected by that because only 10% is affected by that. Now here's another thing. Another 10% of your credit score is affected by your credit mix. Different types of credit. So if you have a car loan, maybe a couple credit cards, maybe you have a home mortgage, just a mixture of those different types of credits, your score is affected 10% by that. Now I think everyone should have 2 credit cards with no balance on it. That's in a perfect world. You have 2 credit cards. If you do have a home mortgage, that's great. Pay that off too. All right. But that's really the mix you want. Auto loans, I'll give it to you from this perspective. My brother wanted to borrow money to buy a car. Now my brother, he only had borrowed money one other time in his life, and that was to buy a car. So that was like back in the early 90s. He borrowed money to buy a car. Paid off the car in 5 years. That's how long it took him. And so 15 years later, he wants to buy another car. So he went back to the same place he borrowed the money from, and they said, I'm sorry, but you don't have any credit. You don't have a credit score at all. Because he didn't have a credit card or anything like that, so there was no credit history reported. So eventually, his score just dropped to 0, which was okay because he was able to borrow some more money, but he didn't get the best rate for when he borrowed money again for his car. So it is about your credit mix, having something there. active lines of credit is good to have, but you don't want a whole bunch of stuff. For example, let me give you some things you don't want. You don't need store credit cards. You don't need a credit card from Home Depot, Macy's, the jewelry store. You don't need those types of lines of credit. Those drive your credit score down. The 5 or 10% that you save at JCPenney because you open up a brand new credit card is not worth it. It's just not worth it. Okay? It's not. Only 10% of your score is affected by that, though. Now, 15% of your credit score is affected by the length of your credit history. 15% is affected by the length, or how long have you had a credit history. So when you see young people just starting out in life, they don't have a very high credit score because they really haven't had a long credit history. Now, some of us who've been around a while, yeah, we've been borrowing money or, operating in this world for a long time, and so we do have a long credit history. So that's only 15% of your credit score that's affected by that, though. And the only way to improve that is time. Only time. Okay? So there's no rushing that extra 15%. I remember when I was just starting out, I was in my 20s, and I think I borrowed money for a car, and they ran my credit, and they showed me my credit score and stuff like that. And I said, well, why is my credit score so low? And at the bottom of the report, it said, these negative factors have affected your credit score. And one of those factors was length of credit history. I was just 20 years old. I was just getting started. Okay? Now that I'm early 40s, when I look at my credit report and credit scores and stuff, and it has those negative factors, it says negative factors affecting your credit score. And at the very bottom, it still says length of credit history. So we're talking 20 some odd years later, and it's still there. So it's always going to report that, is the way I see it. Okay? But all you have to do is just keep living, keep interacting with this world. But they're always going to say that. Now, so far I've covered, 35% of your credit score. Now let's go to some of the bigger items here. 30%, I want to start here. 35% of your FICO score is affected by, guess what? Your payment history. That's huge. 35% is affected by your payment history. Now, if you've only been an on-time payer, meaning you've never missed a payment on the water bill, the gas bill, the electric bill, any credit card bills, any mortgage payments, as long as you've never missed one, that's a good thing. They're keeping track of that payment history. 35% of your score is affected by that. So when you begin to miss a payment, or miss 2 payments, or miss 3 payments, your score is just dropping now. I remember, I don't remember the situation or whatever, but I did not pay my credit card bill one month. I didn't pay it. Or I'll say I didn't pay it on time. Let's say it was due on the 13th of the month, and that day came and went, and I hadn't paid it. And I could have kicked myself. I immediately got on the phone, called the credit card company, and just started apologizing. I'm just talking to the customer service rep. I'm like, I am so sorry. I can't believe I missed that date. I'm not sure what's going on. I said, but it's all my fault. I'm so sorry I missed that payment. And I just asked. I said, is there any way? I said, I've paid it now, but is there any way to not have that get reported to the credit reporting agency? I said, if you look back, you'll see I've never missed a payment in all these years. And the lady on the phone said, you know what, Mr. Morgan, I see you haven't missed a payment before. So for this time, we will not report this to the credit reporting agencies on your behalf. Okay? They said, we'll give you that pass. We'll give you a pass. Now, that was just because I called and apologized. And, I'm just talking to the customer service representative. And I'm the nicest person to those people. No matter how long I've been on hold, no matter how ugly they are acting, because they're just like you and me. They just want to go to work and go home. And so I'm just a nice person on the phone. And, you know, the worst thing they can tell me won't change my situation. So I figure if I'm nice, at least that'll get me somewhere. And on occasion, I've dealt with, and this is just in general now, on occasion, I've dealt with customer service people that are very, very mean-spirited. And I just say, you know what? I'm sorry, I didn't mean to ruin your day. I said, if you don't mind, I'm just going to hang up. And I hang up. And I just call back later, hoping to get somebody else. And I'm back on hold for a long time, too. But that's okay. But I understand people have bad days. I call and talk to the IRS agents quite a bit. And sometimes people are just upset for whatever reason. But I just, you know, I still remain friendly because they're the only people that can help me. They're the only people that can say yes to me. Or they're the only people that can get me to the right person to talk to. And if I'm mean and belligerent, they're not going to, yeah. All right. So your payment history is very important. Very important to make all your payments on time. Do you know that when you don't pay your gas bill on time, electric bill on time, that can get reported as well? You've given your information to those companies to be able to report it to these different credit bureaus. So it's very important to pay your bills on time. Even if you are just making minimum monthly payments, make those payments. That's about your credit history or your payment history. It's very important. 35% of your score is affected by that. Now, when I refer to keeping your credit score high permanently, it comes down to the last 30%. The last 30% is where you keep your score high. All right, the last 30% is based on the amounts you owe. The amounts you owe. Now, what I'm about to share with you, I don't want you to take this to say, that's what I know what I got to do now, okay? Because I'm going to stop you. All right. But the last 30% is based on you keeping the amounts you owe at a certain level in proportion to the amount you can borrow. Whatever that means. So here's what I mean by all of that, okay? It's just a long way of saying this. Let's say you have a credit card, and your credit card has a $10,000 limit, all right? You have a credit card with a $10,000 limit, and you are the kind of person that pays off your credit card in full every single month, all right? When I say that 30% is based on the amounts you owe, you cannot run up more than 5% of that credit card. What's 5% of 10,000? Help me with that. 500. Is that 500? Yeah. You can never let more than $500 go on that credit card and get at the end of the month. I keep everything below 5%. Now, I'm going to show you how to do that effectively in a moment. But when I say I keep it below 5%, let's say I have a $10,000 credit card. I may use that credit card. I may spend $3,000 a month on that credit card. But here's how I do it for the only reason of keeping my credit score high, okay? Number one, I don't use my credit card unless I have the cash in the bank to pay off the bill. That's how I do it, okay? So I might go to Home Depot and buy $200 worth of stuff on that credit card. When I get home, or let's say within 1 day of that, okay, because usually it takes a day to wind up on my credit card itself. 1 day later, I'll go online, look at that credit card, I'll see that balance, and I'll pay it off right away. Now, I do that throughout the month with every purchase because I know I want to keep my total amounts owed less than 5%. Now, there is a stopping point, a measurement date. You need to know that measurement date. So your amount you owe, when your bill gets generated, that is the day you want to know. When does that bill get generated? So that bill will say, you owe us $700. Pay this by the 23rd of the next month, okay? You have a little float time in there, like 30 days later. Whatever that stopping point is, that's the date that they measure what percent of your overall balance you're using. That's the measurement date. That's why I pay stuff off every day that I use the credit card. Because the measurement date, as it comes up, I want that balance to be really low. I want it to be really low. So I just keep paying it off. That way there's nothing for them to report on the measurement date. Now, I don't always zero it out, but I do keep it under 5%. Now, here's how I make sure to keep it under 5% that you can't necessarily do right away. I take, let's say I have 3 credit cards, okay? Got a Visa, a MasterCard, and an American Express. In total, the amount I can borrow, let's just say in total, is $30,000. That's what they're basing that 5% on. Your total, your overall amount of ability to borrow money on the credit cards over all 3. If I got a total of $30,000 and I'm only really using one, that's where I'm trying to keep 5% of $30,000. That's really what I'm focused on. Does that make sense? Okay. Now here's what I'm not saying. I'm not saying you need to go out, open up enough credit cards so you've got a huge ability to borrow a bunch of money. I'm not telling you to do that. That immediately is going to drive down your credit score. You only open up new credit as needed. I opened up those 3 credit cards over, a 10-year period of time. And I'm not referring to the store cards, JCPenney, Macy's, Home Depot. Those credit cards are worthless. Those are worthless. Those just make your credit score go down. I have a home mortgage. I'm not rushing to pay off the mortgage. All I'm doing is making on-time payments, okay? Just on-time payments. But what I found is that whenever I let that amount grow above 5%, when I'm looking at the credit cards, the stuff I use every day, whenever it goes above 5%, even though I pay it off in full, my credit score starts to drop a little bit. Or if I just go the month and they're only reporting $100 that I owe, that credit score goes high. It goes back up. But in order to permanently keep it high, you got to keep your amounts owed low. Okay? People often ask me, should I close my credit account? Should I close out this credit card? They'll say, hey, I've already paid it off. Should I just close it out and get rid of it? Well, the answer is, if you close the credit line and you've had it for any length of time, it's going to make your credit score go down. It's going to make it go down. So the effective thing to do is let the credit card stay open. Just don't use it. Don't put it in your wallet. Go put it in a drawer. I know people that will take a freezer bag, one of those Ziploc freezer bags, put water in it, drop the credit card in, and go freeze it. I'm not telling you to do that, but that's what people do. Because it's a self-control issue, and if it helps, it helps. I'm not knocking it. But all I'm saying is if your goal is to keep your credit score high, don't start closing different credit cards just because you've paid them off. Don't start doing that, because that's going to, your payment history, or your length of credit history will begin to go down as you do that, and that's affected by your credit. That'll affect your credit score. So you got to be careful about that. Now, so the effective thing to do, wherever you are now, just make sure that you've begun paying down debt. That's really the effective first step. Number one, before you start paying off debt rapidly and all this and that, make sure you're meeting the minimum monthly payments on whatever you owe. Just start paying them down. Paying them down. Okay? Just with minimum monthly payments. And then focus. Focus on just one card. Maybe the one with the lowest balance. Just start, any extra money you have, just start throwing it at that credit card and just paying it off rapidly. But it's not going to start there. You first have to make sure you're making the minimum monthly payments on everything you owe. On everything you owe. Don't be looking for, I'm using my best English now. Don't be looking for somebody to come along and hands you a bunch of money to wipe your slate clean. Don't wait around for that. It doesn't work. And I'll tell you that I've had relatives, and so I'm speaking to some of you all little old people in here, because you guys are the ones that do this. I've had my little old relatives see a younger relative with a bunch of financial issues. And so they will take a bunch of money and say, sweetheart, let me pay all this off for you, give you a fresh start. And that's what they do. You said, where is that? Oh, yeah. Well, they're around. No, but it doesn't work. So you'll give them a bunch of money, you'll wipe their slate clean. 2 months later, they're right back where they started. Right back where they started. The example I just gave you in my family was from a 75-year-old, that's my little old person, paying off somebody who was 40-something's debt. That's the young person. Right back in debt. It's about self-control, and somebody coming along wiping the slate clean for you doesn't focus on where the issue really is. Now, I'm not knocking it. If somebody came along and said, Arabian, here, I'm wiping off your home mortgage right there. I ain't mad at you. I remember at one of these workshops, a little old lady came in and she was complaining about her messed up younger relatives and nieces and nephews and grandchildren and stuff. She was complaining really bad about them. And she had a lot of money. And so I said, well, it's your money. You do whatever you want with it. And this was in front of everybody. I said this. So I wasn't trying to take advantage of her or anything. I said, but I just want you to know my father died when I was really young. And so if you want to adopt a grandchild, I'm right here. No, seriously. But I said it in front of everybody. It's not like I went up to her later and said that, I was telling the truth, though. I do need adopting. Both my grandparents are dead. So, anyway, I put that out there. Now, here's a cautionary tale. Because sometimes we'll say, well, I'm not just giving them money. I'm going to loan them some money so they can get back in a good financial position. That is not the right thing to do either. You are not the bank. You are not a financial institution. You need to be careful who you loan money to. Now here, this is a case in point just to prove it, okay? Let's just keep the numbers really small, really small. Let's say, now we're talking about you as an individual, okay? You have borrowed $100 from your best friend or family member, okay? You did that. Now, sitting in front of you, and you owe that money now. It's been a while. You owe that money. In fact, you're 3 months behind on giving them back their money. But sitting in front of you is the following. You have in front of you a cell phone bill for $100 that if you don't pay it, they're going to cut off your cell phone bill. You also have your electric bill in front of you. It is pink. It is $100. Now, some of you have never seen a pink electric bill before, but when your electric bill is pink, that means that you have not been paying it, you haven't made any payments for the past several months, and they're about to turn off your electricity. So that's $100 as well. The third thing in front of you is $100 that you owe your friend or relative that you borrowed from that you're 2 months late on. My question is, which bill do you pay? Who says I would pay the cell phone bill? Okay. Who says I pay the electric bill? All right. And who's lying about the other one? Who say I'll pay the relative back? Let them turn off my phone, let them turn off my electricity, I'm paying the relative back. Who didn't raise their hand at all? This is the reason that you should not loan people money, especially family and friends. Now I'm going to tell you how you loan people money now, okay? So that's based on my own personal experience. So here's how I loan people money now. Number one, whenever somebody asks to borrow money, I have to know that I don't need the money back. I have to know that for myself. If I don't know that, it's not going to happen. That's the first thing. The second thing I have to do, whenever they ask, let's say the dollar amount is $100. Hey, can I borrow $100? I immediately say, sure, but I need your car keys and your car. And I'm going to keep it until you pay me back. I ask for something in return right away. Later on, it's too late. Anytime somebody asks me to borrow something, I ask for something in return right away. Always worth more than what they want to borrow. Now, I've shared this in the past, okay? This was a long time ago, all right? My mother asked to borrow some money to take her nieces out to the LA County Fair. And I said, okay, well, let me hold on to your wedding ring, though. So let me hold on to your wedding ring. Yeah. That was fun. All right, that was fun. Now, I did that just so I could start saying it in these workshops. But that was a long time ago, all right? So let me hold on to your wedding ring. Now, her wedding ring wasn't worth more than the buttons on my shirt, okay? You know, I'm sure it wasn't. You know, mother of pearl, something or another. But anyway, it makes for a good story to tell. That's why I did it, okay? But yeah, ask for something in return right away. Later on, it's too late. You can't go back later on and say, hey, give me your car keys in the car. No. That's all they're going to say to you. Maybe you want something in writing. Yeah, that's fine. Whatever. I've had people that borrow money, put it in writing, I promise to pay you back, to the point where I wind up in small claims court. Having that piece of paper that they signed saying, I promise to pay you back later, and they write it, they sign it. I go to court. The judge says, was it a gift or did you loan it to them? I said, Judge, it was a loan. Here's the piece of paper. They signed it. And you know what the judge said to me? She said, you win. I even got a document from the court saying, I win. No. Now, here's what I did with the document. I took the document, I ripped it into 4-inch squares, sat it right next to the toilet paper in the bathroom in case I ran out. Because what the judge did not say is, here's your money. You just get a piece of paper saying, you win. And then you got to go through all this hassle to still get your money back. So that's why I adopted these rules for myself. Number one, if I need the money back, I don't loan it out. Number two, whenever I loan it out, I ask for something in return right away. And guess what? It stops people from bugging you. It really does. If they know you're going to ask for something every time they come to you, there you go. I've loaned people money, not needing it back. If they pay it back, that would be wonderful. But then we show up to Thanksgiving dinner, and we always do Thanksgiving dinner, right? Relatives all gather together. They will drive, let's say they owe you $1,000. They will drive up in a brand new car. Whether they leased it, rented it, whatever, I don't know. But drove up in a brand new car and still haven't paid me back. Tell you that turkey tastes different. It tastes different. Looking at them across the table. I remember my wife and I, we had loaned a family member some money, and they were going to be coming to dinner. And, so what we did was, because we wanted the food to taste excellent. So what we did was we called up the person and said, hey, listen, you know that money you owe us, it's forgiven. You don't owe us anything. That way, and when they showed up to Thanksgiving dinner, I'm telling you, my food tasted really good because I had forgiven the debt, just wiped it out. And now I don't make a habit of that, but I'm just saying, I'm not in business just to do that. But when you're loaning family money and you see them with new stuff, even if they've borrowed that too, it leaves a sour taste in your mouth. You're like, but you haven't paid me back yet. And, even if you ask them for their watch, maybe they don't have a car. Let me hold on to your watch for you then, until you pay me back.
Does that work?
Whenever you ask for something in return right away, people stop asking you for things. I've done this where people just say, can you do me a favor? Not even borrowing money, just, Hey, can you do me a favor? Oh, yeah, but I need you to do this for me. Right away, I ask right away. People stop asking me for stuff. Will you? Yes, will you do this? I've had people that have owed money. They show up 5, 10 years later, trying to knock on the door. They'll knock on my door, and they'll say, hey, you know that $100 I owed you? I say, yeah, okay. And they'll say, well, here's 75. Now, because I really was, if I didn't need it back, I kind of mentally just checked out on that. You know, and being the nice person that I am, I still take the money. I still take it, you know. And I don't say, what about the other 25? I don't do that, you know. I'm just happy it came back. Then you got your relatives who will, you know, they'll pay you back, and then before they turn around and walk out the door, they'll ask for some more money. And then you say, I'm sorry, I don't have it. I'm all busted out. They're like, but I just gave you $100. And I was like, yeah, man, I spent that as soon as you handed it to me. I know where that's going right now. I got this bill. So, yeah, you want to be careful of that. I've had people here at the church come and complain to me because some other parishioner they loan money to and have not been paid back. And all I can say is, if you had asked me before you did it, I would have told you not to do it. That's what I would have said. That's what I would have said. So, and they were like, well, can't you go and complain to the pastor about it? I'm like, they don't owe me anything. I said, you do what you want to do. But, you know, people are people. You're not a bank. Be careful of how you loan people money. You can give gifts to people all day long because you're not expecting it back. Something to think about. Yes, you can. I have a microphone right here. Yeah, I have a microphone. If you have a question or comment, just come right here to the microphone. Absolutely. I'm sorry I didn't mention that earlier today.
You're talking about, and I've made it a policy now that I don't loan any more than I can afford to give away. And saying that is that I have one of our family members being in the body of Christ, that I loaned several $1,000s to, and they're going to pay it in X amount of days, or should I say X amount of weeks. And the weeks turned into months, and the months turned into years. And I would see this person consistently here in the ministry. You know, they started avoiding me. And that kind of troubled me just because, you know, you were avoiding me. And so I tapped this person on the shoulder one Sunday, and I said, you know, the money that's owed to me, I'm gifting that to you. And they didn't want to accept it. I said, how can you not accept it? You've had it for 5 years. Just receive it. Okay? Just receive it and speak to me.
And so you made a good point there, brother. I really appreciate that point. Because that not only goes to why I have that roof myself. If I can't afford to give it away, I'm not going to give it. But people, what everyone needs to understand, if you owe money to any company or person, and you're going to be late, maybe you're going to be late with the rent, it is better for you to contact the person, not hide from them. Contact the company, not hide from them, to say, hey, I know I've got this payment coming up. Hey, this occurred. I'm not going to be able to pay you. I want to let you know, don't expect this money from me. It is better for you to do that than to ignore the bill, to ignore the rent. Oh, your landlord will love it if you call them ahead of time, because that way they can prepare to not get the rent. Now, you can't do that every single month, but I'm just saying, you don't want to hide from the person that you owe or from the company that you owe money to. Get in contact with them. Maybe they have a special arrangement for you. Does that make sense? Our natural inclination is, let me hide. I understand that. I don't want to talk about it. But I'm telling you, it will be better for you if you, especially those companies, contact them. Yes, ma'am.
You were talking about, you talked about keeping a loan at 5% of credit limit. What do we do about car payment? Is it the same rule for car loans, or is it a different rule?
So for car payments, it's not about keeping it at 5% because that's not a revolving line of credit. I'll say it that way. Your car payment is a locked in amount that you've borrowed and your goal is just to pay it back. So with your car payment, the goal really is just pay it back. You could pay it back as agreed, or you can pay it back much faster. It's completely up to you on that. There's no 5% rule. Really, that 5% rule is on the credit cards, okay? And so that's where I would leave that, because the revolving line of credit is really where the 5% rule comes in. I appreciate you asking that, because that way I can make it a little more clear.
Okay, so it doesn't affect the score?
No, your score is affected by your car loan. As you pay it back as agreed or much faster, your credit score will go higher. Yes, it will. Yes, sir.
Yeah, I was trained that you really, if you can control yourself and you don't go crazy with credit, that it's better to get more credit cards than to have less. That if you gain a credit card, that you actually increase your line of credit, and as long as you're utilizing it to a smaller percentage, that your actual overall credit rating will actually go up, as long as you can keep control of yourself and don't go crazy.
Right. When you apply for the credit card, your score is initially going to go down. If you don't use it in excess, your score will go higher, okay? Now, we're talking about major credit cards, not store credit cards, okay? Initially, your score goes down. Eventually, it'll begin to go back up because of the amount of lines open you have. But on that one note, everyone, sometimes you might, let's say you want to buy a house and borrow for the house. The mortgage company will say, we're not going to lend you this money because you have so many credit cards. There's so much ability to go into debt super fast. And they'll say, we want you to first start closing these accounts before we will loan you the money. That's what they'll tell you. All right? Yeah. Yes, sir.
Yeah, just a point of information. I bought a car and I got the insurance, the gap insurance from the car. Meaning that if something happens to the car, the loan company will pay the difference between what the insurance company pays for the car. So you won't have to come out of your pocket to make it equal.
Okay.
Well, I was paying ahead of time. So I had paid like almost a year ahead on this car. And then my wife totaled the car, and they paid me what we owed on it. The gap, I got none of that money back. I'm paid off in advance, so unless you, it's not a good idea to pay ahead on stuff you got, in that situation, because you wind up, I would have, the insurance would have covered the balance of the car. It wouldn't have paid for it. But I wound up paying for it ahead of time. And when the car got damaged, that money was spent already, and that was out of my pocket. Okay.
Yeah, so when it comes to buying a car, now I've said this in times past, I'll say it now. It doesn't always sound good, but I'm just going to lay it out there for you. You should not be buying a new car unless you are a millionaire. You should not buy a new car unless you are a millionaire. Or you're going to drive that car for 20 years. Let the wheels fall off. Otherwise, you have wasted your money. You have wasted your money. Because the value of that car so rapidly goes down the moment you drive it off the lot. If someone, let's say that when the car is on the lot, it's got a big sign on top that says $30,000, and you drive it off the lot, and now the sign says $20,000. If you actually see that, that would prevent you from buying that new car. Because you can't afford a $10,000 loss in value immediately unless you're a millionaire. Otherwise, you care about it. Now, I have several friends and family members. They bought new cars, and I don't condemn them or anything like that. I don't know why they ask me my opinion. I'm like, well, you already bought the car. What's my opinion? And they say, hey, I just bought this brand new Toyota Camry. And I'll say, wow, that looks nice, period. Should I have done that? And I'm like, and so all I say is, as long as you drive it until the wheels fall off, you got yourself a good deal. You drive it until the wheels fall off. But otherwise, I encourage people, buy a used car, a couple years to 3 or 4 years old. That way, when you drive it off the lot, the value hadn't gone down much. And I do what I talk about, okay? I do what I talk about. I've bought brand new cars, drive them till the wheels fall off. I've bought used cars. This last round of cars, I had to buy 3 cars at one time. I had to buy 3 cars within a 3-month time period. Bought them all used. Pay cash for them too. Turn around, pay them off, or turn around, sell them for the same amount I paid for them. You know, that's what I like to do. Yes.
What is the big difference using a credit card compared to a debit card?
Okay. So there's a couple differences here. Whenever you use your debit card, the money immediately comes out of your bank account. Whether it's a checking or savings, it immediately comes out. There are not as many debit cards. When those came along, well, let me back up to credit cards. With a credit card, your money does not immediately come out of your bank account, okay? It does not immediately come out. There are also several written protections, written out in our laws of the United States that say these are the protections you have when you use a credit card. Those laws came into effect a long time ago. Debit cards, on the other hand, are relatively new. So when debit cards came out, the banking industry really was able to talk to congressional lawmakers to not have those same laws in place. All right? In writing, they're not there. So when you use your debit card, I think it's healthy to use your debit card in certain circumstances. When you don't have to, if you're buying something and you're not buying it online, you're buying it in person, it's a good way to manage your money because you're only going to use what you have. You should not use your debit card unless you know what's in the bank account. You should not use it at all because you might over withdraw and then you're going to have a whole lot of fees and things to pay. If you are buying anything online, you should never use your debit card. People do all the time. You should never. So this is just me giving my opinion. My best advice, don't use your debit card because the money comes out right away, and if there's a problem with what you bought online, it's going to be a hassle to get the money back. I'm not saying you'll never get it back. It's just going to be a hassle. So whenever I buy something online, I'm always using a credit card. Does that make sense? Now, I've had people argue with me saying you have all these protections with a debit card. All I'm saying is the written laws are set up to benefit people that have credit cards, not the debit card. Me personally, if you have a debit card, I would say make sure it does not have a Visa or a MasterCard logo on there. Okay, so if you have you have a debit card on, you pull it out. Just pull it out. I'm gonna pull out mine. I think I got mine. I have a debit card. I think I have a debit card. Okay, I don't have my debit card with me. Okay. On your debit card, if you have a Visa or a MasterCard logo, you need to call the bank and say, I would like a new debit card without a Visa or a MasterCard logo. Because how many people here can use your debit card and not have to put in your PIN number at times whenever you buy something? Okay? That means somebody can get if they get a hold of your debit card and they can go buy stuff and not have to enter a PIN number, then what's the point of that? They just pulled money directly out of your account. I'm not saying you won't get it back. I'm just saying it's a hassle to get it back. So what I do, I just said, hey, I don't want to have a Visa or a MasterCard logo on my debit card. So every time I use it, every single time, without exception, I have to enter a PIN number. I don't use debit cards online. Yes. Yes, I'll say it again. Every time I use my debit card, I must enter a PIN number. I don't care where I'm at, what I'm buying. I have to enter a PIN number. Why? I don't have a Visa or a MasterCard logo on my debit card. And all I did was call and ask them to send me one without the Visa or MasterCard logo. So I'm just telling you, don't do it. You have a question?
Yeah. Back to cars.
Back to cars.
Give me the advantages and disadvantages of leasing a car, and is that better than purchasing a car?
So if you are the kind of person that drives very few miles during the year, and, not or, but and you like a new car every 3 years, and you don't mind making monthly payments during those 3-year periods, lease away. Lease away. But all 3 of those things have to be in place. Now, I'll tell you, the second car I ever bought, the first car I ever bought, I bought it used, and I owned it for less than 3 days. Sold it right away because I didn't know how to drive a stick shift. I was like, how do I sit in the car holding a milkshake in one hand, holding my girlfriend's hand in the other seat, and drive this car while moving the stick around? I didn't see how to do it, so I only owned that car for 3 days. But the car I bought after that, I leased it. I thought I was a person who always would want to, remember, I was a young buck. I was very young. I was in my 20s. I just started in life, 20 years old. Oh, wow. Yeah, I'm going to want a new car every couple years and leasing it. Oh, this sounds great for me. Then I realized I'm not that kind of a person. So the next car I bought after that lease was up, I bought it brand new and drove the car for 23 years. Car just stopped working on me and said, Arabian, that's enough. Yes. All right. Yeah. Yes, ma'am.
Arabian, there's something you didn't touch on. I just recently paid off a big bill that I owed. And it said principal balance, and you know how you have the bill, they show you the principal balance, and then they show you the interest that you paid.
Yes.
Okay, I paid it off 7 years early. It was 8 years, so I paid it off early.
Okay.
Well, I paid off the principal balance, and that's what I sent in. They sent me another bill, and I called and questioned them. I said, wait a minute. I said, I paid this off. And they said, yeah, but you didn't pay off the interest. I said, wait a minute. I'm not paying no $8,000 worth of interest on here. They said, no, that's already paid. All you owe us is another $40 something. So I was just wondering,
Where
why
does that come from?
take place?
Well, that's why whenever you're about to pay off a bill in full, you want to ask for a payoff quote. When you think it's your last payment, you call and say, what is the total payment? Because interest builds up or accrues daily. So that's where that extra came from. You just want a payoff quote whenever that occurs. Now, sometimes some companies will charge you $40 for a payoff quote. I'm like, what's with that? But just keep that in mind. But that's where that little bit extra came from. I don't believe they were cheating you. Yes, sir.
Yes, you mentioned the 3 credit bureaus. If you're buying property, they use the middle score of the credit bureaus. Is that typical with everything?
No. So when you are buying real estate, those lending companies, they are going to check all 3 credit bureaus most likely, and they'll use whatever the middle score is. But for other places where you might want to borrow or get some credit, or they check your credit history, they might only contact one of those credit bureaus. They might only contact one of them, okay? And I'm glad you brought that up. It brings me to something very important. I want to talk about identity theft. Now, I'm only going to deal with it in one aspect, though, okay? Just one aspect of identity theft. If you want to prevent somebody from opening up new credit in your name, and going hog wild with it, if you want to prevent that, the laws have just now changed. There's a federal law now that says California can no longer charge you to prevent it. Here's what I'm talking about. There's something called a credit freeze. Freezing your credit simply means no one can open up new credit in your name without knowing the password. Okay? So if you contact each of the credit bureaus and say, I would like to freeze my credit, they will give you a long password. The goal is not to lose that password. Because if ever you need to borrow money or something like that, you first have to unfreeze your credit report. And they're going to say, what's the password? Now, California, up until last year, they were charging us $10 every time we wanted to freeze or unfreeze. But now there's a federal law that says it's free now. Contact the credit bureau, just say you want to freeze your credit, they give you the password, and you're done. Don't lose it though. Now here's what the credit bureau is going to do. They're going to say, hey, how about we just do a credit lock for you? There's a difference between a credit freeze and a credit lock. The three major credit bureaus do not want you to freeze your credit because it prevents them from it prevents them from selling your information to companies to market to you so that you can open up new credit cards and stuff like that. It prevents them. It cuts down on all that mail you get saying, here's a new credit card offer. So credit bureaus do not want you to freeze your credit. So what they've started doing this year, they say, okay, we're going to do a credit lock, which allows them to keep making money. So I'm telling you, freeze your credit. It is the more effective thing to do. Freeze your credit. Don't lose the password. Now, 3 years ago, I had to unfreeze my credit in order to borrow some money to buy a house. And I remember the lender called me up and he said, Arabian, you need to unfreeze this Equifax credit report. I said, okay, what did I do with that password? So I got on my laptop and I just did a search for Equifax password. Don't do this, okay? I said Equifax password, and it took about 10 seconds, and it popped up a file, and that's where the password was. And so I unfroze it on the computer real quick, instantly unfrozen, and that's what I did. But I was like, I've been telling people not to lose their passwords. Let me see if I can find mine. And that's what I do. So, yeah. Yes, ma'am.
Okay, I got a little story.
Okay, ask me a question now.
It's a question.
Okay.
Okay, the question is, I got scammed on my computer by my printer went out and I got it fixed. You know, I had them come on my computer, fix the printer. They took out 2 payments of $149. After about 20 days, they called me back and said, is everything working okay? Yes. They says, well, we took out 2 payments of $149. We want to give you your money back. They asked me for my credit card, and I gave it to them. They gave me not only my money back, they gave me $11,000, and they put it in my credit card. Yeah, you shaking your head like you know what I'm telling you about. Tell me what to do, Lord, because right now I'm owing them $13,000, and they said it's my fault.
Okay. So this is a cautionary tale for everyone. Number one, never give your bank account information to someone on the phone that has contacted you and you haven't contacted them. You can come have a seat. It's going to take me a minute. Come have a seat. Yeah, come sit down.
Oh, you told me,
Yeah, come sit down.
You don't, because you know I'm going to say something else, don't you?
Well, come have a seat. Okay. So this is a cautionary tale here. Let's say you get a check in the mail. Somebody says, we're going to hire you. You've been looking for a job. They say, we're going to hire you. We're going to send you your paycheck in advance. We're going to pay you $500 a month. They send you a check for $2,000. And you call them up, hey, you sent me $2,000 here. They're like, our mistake. Just send us back $1,500. Appreciate that, thank you. Now you put the money in your bank account. Your bank sees that check as a legitimate check for about 3 months. Meaning there is a long delay between the bank having you making the deposit and sending them back real money before the bank realizes that check was no good. It happens a whole lot. You've just converted a bad check into real money that you've sent some people their money. You just sent them real money. That's the scam. Similarly with you, because you gave them access to your accounts, they were able to take out money. Then you gave them more access to other accounts. They were able to, what appeared to be, pay you, and you didn't complain when you saw the payment go. You saw your bill drop. But yeah, it's all scams. So how do you get out of it? You actually need to contact the companies and begin to work through that process. And I'm not saying it's easy. I'm not saying it's going to be brief, but it is a long, arduous process. And you should change your bank information. You should get a new bank account. But contact that credit card company, I believe it was. You need to begin working through that process. But it's a long, drawn-out process. I'm just saying, contact the credit card company, begin to work through the process with them. It's going to take a long time. There is no shortcut because something very bad happened. And unfortunately, you, like many other people, have this happen. So, class, you got to be more aware of who you give information to. Now, my wife, now don't go approach her and say, your husband told us about you. She has this problem too. You get her talking on the phone, you can just about ask her anything and she'll start telling you. And I have had times, I'm just walking by and I hear her on the phone giving information to people. And now, I do not smack my wife, okay? But I will smack the phone and then ask, who are you giving that information to? All right? Now, it only takes me one time not to want to do that again. All right. But now I just go and start pulling on her shirt like a little kid, trying to get her attention. Who are you talking to? You know, just who are you talking to? Why are you giving them? I get upset when my wife fills out an application and it asks her for her social security number. I'm like, why do they need that? No. Why do you need that? Changing doctors. They have you fill out this form. This is your first visit. Fill out this form. Social security number. Leave it blank. Leave it blank. A lot of identity theft, because that's what I'm focused on here, a lot of identity theft occurs at these medical offices because they don't have proper controls in place over sensitive information. And the only reason the dental or doctor's office needs your social security number, the only reason they need it is to put some bad stuff on your credit. That's all. I remember switching dentists and oh no, we absolutely required this social security number. And I say, I'm a cash paying customer. I say, I'll pay you in cash before I sit down in the chair, but I'm not giving you that number. Now what I've learned is, you don't give them that number, and if you have a health care plan, they might give them the number for you. So I'm like, I can't win. I can't win. But at least I can prevent myself from putting that number on the piece of paper. In fact, I just leave it blank. Sometimes they don't even ask me for it.
What about the last four numbers?
Sometimes people ask for the last four numbers or something. I don't tell them that. I don't tell them. Nope, haven't done it. In fact, I used to think, why don't I just make up any 9-digit number and put it on there? But I say, you know what, best thing, I'm just going to leave it blank. Yeah. I had to go to the emergency room a few weeks ago, and it was my very first time in this emergency room, so I filled out the little form, and I left the social security number blank. And they didn't say anything to me. But guess who gave me the form and asked me about filling it out? It was the security guard at the front entrance. And all I'm doing is handing it to him. So I left it blank. So later on, they see me, they do some x-rays and stuff, and I get to another person, and she's already got all my information typed into this computer. And so I said, okay, all right. I said, so how much do I owe you? So how much do I owe you? And she was like, well, I said, because my copay card says I owe you $50, so I just want to make sure I pay you. I want to pay you right now. And she said, well, no, we'll send you a bill. And so she was like, I just need your social security card information. And I'm like, no. I said, I got $50 right here. My copay card says $50. She was like, oh, we'll just send you the bill. And so that was 3 weeks ago. I haven't gotten the bill yet, so guess what I'm going to do? I'm going to go back to that hospital, see if I can find one of the billing administrators and say, hey, I know I owe you guys $50 and nobody sent me a bill yet because I don't want that to go on my credit report. And so many people have told me, I didn't know I owed any money and it's been sitting on my credit for a long time. I'm going to do that next week. I'm going there next week. In fact, I should go, I'm going to do Monday. Monday works. I'm going to go tomorrow. Because I'm like, I never got the bill. And I know I owe you $50. So there is a new, out of those 28 FICO credit scores I talked to you guys about, I was saving this one for the end. Out of those 28, there's a brand new FICO credit score that does not take into consideration medical billings that you have not paid. It leaves that off. And if some company wants to use it, it'll show a higher credit score than the others because this one does not look at any medical history that you have not paid. That's brand new. But here's the thing. Not everybody uses that one. It's so new, very few people use it. Very few companies actually look at that one. I'm hoping more and more people will start to use it, but that's not the case right now. It's so new. All right? So just something to look at. But if you know there's a medical bill out there, you haven't paid it in a long time, you haven't seen a bill in a long time, and you need to check on it because it could be on your credit report, making your score go lower. Please, talk to me.
If you have a large student loan balance, but you're caught up and you're like paying and it's not in default or anything, how does that affect your financial future in terms of being able to buy a house or receive a loan?
That's a very good question. So student loans and your ability, as long as you're paying them on time as agreed, you're doing great. Now, how does it affect your ability to buy a house in the future? Well, here's how it works. Most mortgage companies, they look at your monthly mortgage pay or your monthly payments to everybody you owe money to, just the minimum monthly payments. They look at that in comparison to your overall income. So they compare those two numbers together and they develop what they call a debt to income ratio. Your minimum monthly payments divided by your overall monthly income. The bigger that percentage is, the better. So when you have a lot of student loans that you're still paying off, those monthly payments are factored in, and it lowers that ratio, and they may not want to grant you that mortgage loan.
So now they have some student loan payment plans that it's the amount you owe monthly is based off of your income, and it'll never exceed more than 10%. So if a mortgage company is checking my credit, and are they only checking what the student loan company is charging me minimally? So like
when they're calculating your mortgage, your ability to repay the mortgage, they're looking at the minimum monthly payment.
Okay.
They are looking at that. Now, I'm just going to tell you, don't play those games with that student loan company.
Right.
If you can pay them back sooner, get rid of those student loans. Get rid of them.
Really?
You can't bankrupt out on them. Now, I'll say this. There's a law in the works right now, making its way through Congress, that, well, there's already a 10-year plan that if you make on-time payments for 10 years, they disappear.
Right.
Okay, great. People have issues with that because right now people are having a tough time proving they've made their on-time payments over the years. So that law is not what it's made out to be because people have not been able to take advantage of it, which is unfortunate because that was what we were told when we first started out, repaying. So the new law making its way through Congress may not be successful at all, but it's to make that if you make on-time payments for 20 years, everything disappears.
Yeah.
Listen, you don't want to have those debts stick around for 20 years. You don't. I would say just attack those student loans, get rid of them as soon as possible. Don't play, especially if you have aspirations of buying a home in the future, maybe buying some other real estate type things. Don't play those games. Get rid of the student loans. Okay? That's just my word of encouragement for you. Okay. Yes, ma'am.
To piggyback on the same topic about student loans, if you already own a home, can student loan debt affect your title on that home? Like, can they come after your property because of student loan debt?
So now you're asking me a legal question. I only play a lawyer on TV.
Okay.
So that's a legal question. It depends on what you agreed to when you signed the student loan. So if you have your original student loan paperwork, it'll say what they can do when you don't pay them back. So if you signed and they said that we can't attach your assets if you don't pay us back, I'm sure they can. So, but that is a legal question.
Okay.
I know that just from working with people I do taxes for, that if you have not paid back your student loans, they'll put a judgment against you such that it takes away your refund, your tax refund. So I've seen that happen several times. I have not seen them attach the home yet. But I'm not saying they can't. I'm just saying I haven't seen it. So
Thank
yeah.
you.
Okay. There's the mic. I like when people say quick question because you know it might not be so quick. All right.
A quick question. Okay, I have 3 credit cards also, and one of them is the American Express. Of course, I've been paying my credit on time, but for some reason I didn't realize that they increase it without even me, I guess I don't know if they should notify you because they
Increase your credit line?
Yes.
Okay.
And so is that illegal, or can they do that without our permission?
I think they can do that without your permission. You're a current
Yeah.
customer, and increasing it only makes things better for you. Now, as
It
long
keeps me in debt.
well, no, you're not supposed to use it.
Right, I
5%
haven't
rule.
used it,
5% rule.
Okay, then, because
yeah,
they
don't
increased
use
it
it.
3 times already, and it's like,
That'll make your credit score go up, but you cannot use it.
okay, yeah, because I haven't, because I get the email, it's like,
Yeah,
wow.
yeah, yeah.
Oh,
So,
okay, so they
yeah, they're allowed to increase the line all they want. Yeah. Now,
exactly.
you can call them and say decrease the line to a certain amount.
Okay.
Now, when you do that, you are going to hurt your credit by, your credit score is going to go down because it takes your overall available amount of balance and it shrinks it. So your percentages are higher in terms of how much debt you're carrying compared to how much you could do. Now, but I've done that. I wanted to give, I wanted to let a family member put a family member's name on a credit card so they could use it in case of an emergency. So I had this one credit card with a bank, and it had like a, I don't know, $15,000 limit. So I called up the bank and I said, I want you to decrease the available balance on here to $500. And I gave it to my family member to use in case of an emergency. No, I'm just saying. I wasn't going to give them a credit card that they could run up 15 grand on.
Right.
So I'm just saying, you can call and tell them to reduce it if you want. Okay?
When you just said about that,
It'll go down. Yeah, your credit score will go down. All right. Yes.
How do we handle a credit card which charges fees?
How do you undo it?
Yeah, if I don't owe anything, you said we shouldn't cancel credit cards.
Oh,
But
you
I
have a
have this
monthly
credit
fee on it.
card which I don't use, but I still pay, even if I don't spend it in a year,
Okay.
I still
I got it.
pay the fees.
Here's what you do. You need a different credit card. So I want you, because canceling your credit cards are going to make your credit score go lower. Now, here's the effective thing to do. You want to do what I call a leapfrog method. You want to open up a new credit card without an annual fee. All right? Open up a new credit card, get that same balance or credit limit, and then close the other one that has an annual fee. Okay? So you're going to open up a new credit card with the same type of balance or credit limit with not an annual fee, and then immediately close the credit card that has a zero balance on it but has an annual fee.
So open with another company?
Open with another company, close the other one. That's what you do. I call that a leapfrog method. An annual fee. Now, I'm not talking about interest. I'm talking about an annual fee. Oh, a lot. Every company has a card with an annual fee and without an annual fee. I say if you're the person who's paying off your credit balance every single month, you want a no annual fee. I don't pay any annual fees. I'm like, no. I mean, even cards that, and don't go chasing cards just because of the rewards. Some cards give you 3% cash back or bonus stays or airline travel miles. Listen, unless you're some person that travels all the time. No, let me go a different route on this. A lot of those reward cards are meant to trap you. Okay, they're meant to trap you. You think you're going to pay off the balance every month. You think you are. So you're going to use it more to get the 3% cash back. But guess what? That credit card company's been around a long time, and they understand the nature of people. They understand the nature of humans. They know you're going to trip up. And that's when they got you. Listen, if you want airline travel rewards or hotel stays, things like that, it is of no use to you unless you're charging like minimum $5,000 a month in credit card charges. Otherwise, it's not worth it. Minimum $5,000 a month. Minimum. Now, I pay it off right away. Credit cards should be a convenience to not have to walk around without a bunch of cash. That's what they should be. They shouldn't be just to delay payment forever and ever and ever. That one thing that you saw on sale, you wind up paying so much for it. So much. And I've had people, I just said, you want to improve your financial situation, quit going shopping. How many shirts do you need? How many pair of pants do you need? How many pair of shoes do you need? Just quit going shopping. And they'll say, my wife and I, we go shopping. And I say, okay, you and your wife stop shopping. And they'll say, I can't talk to my wife about it like that. I say, okay, you stop buying stuff then. Don't buy anything for you. Let your wife or spouse see that you're not doing it anymore. Maybe they'll pay attention. Because I know not everybody can talk to their spouse to say, don't buy this, don't buy that. Let's stop. Let's together not do this anymore. Stop going out to eat. Take your lunch to work. I've been taking my lunch to work for the past 15 years. 15 years. I remember buying lunch every day for $5. And then it started going up from there. That's when I started taking lunch. I have the most awesome set of fast food restaurants and non-fast food restaurants around where I work. Awesome food. Only if I forgot my lunch at home. Only if I forgot. In fact, I have lunch and dinner prepared. Okay? Because I work a lot at night, so I prepare lunch and dinner. Now, when I say I, really it's my wife. I thank my wife for that. But if she's out of town or something, I put it together myself. If I forget it, that's when I'll go and get something to eat. But I try not to forget it. I'm not saying it's any healthier. All I'm saying is it's a lot cheaper. And what do I do by all that money? I get to save money. I get to pay off debts. First one thing and then another. I mean, that's how you get rid of a lot of debt. Just stop spending it on other stuff and attack whatever it is you're paying off. Oh, my goodness. And you'll rapidly start seeing it disappear if that's your goal. If that's your goal. Not everybody's goal is to get out of debt. Not everybody's goal is to. Okay? I've had people, 80 years old and say, I need to get rid of this debt. And in my mind, I'm thinking, why? You're 80 years old. But I don't discourage it. But I say, okay, call me. Let's talk about it a little bit. Let's figure it out. But I'm not going to say, I want you to take all the money you've saved up in retirement and just pour it onto that debt. No. That's what I try to prevent people from doing. But this guy was 80 years old. That conversation happened this morning when I showed up. Talk to me.
You said that you have to pay to check your credit score. Does that mess with your credit score?
Oh, that's a wonderful question. Does it mess with your credit score for you to check your credit score or your credit reports? The answer is no. As long as you're doing it, it does not affect your credit score or your credit reports. It does not affect it at all. Now, when you try to open up a new credit card or other borrowing money, when they check it, it affects your credit score negatively, at least in the short term. Okay, that will occur. Now, let's say you're shopping for a car. If you're going to shop for a car or a mortgage, do all your loan shopping within a 1 week time period, and it will not affect your credit score. Won't keep going down because you keep having them run your credit. Do it all within a consolidated 1 week period of time. Okay, whether buying a car or or looking for a mortgage on the home. Okay, yeah. All right. So, you guys asked some very good questions today. Is there any question outside of anything dealing with debt or credit, anything on your mind that you don't mind sharing on the microphone, I'll talk to you about anything financial whatsoever. Go ahead. You just go ahead and get in line there. Anything financial that you don't mind asking in public. Go ahead.
I know this is kind of a general question,
Sure.
but is it more important, I guess, to concentrate on having at least a year worth of savings than paying off credit card debt or any type of debt at all?
It depends on your goal. If you don't foresee, if you're not in an emergency situation right now, if you don't foresee an emergency coming at all, I would suggest you have a little bit of savings and then focus on your, maybe having 2 months rent payments stored up, or 2 months of mortgage payments stored up in savings. But then everything else you just throw at that debt to get rid of it. Now, if you're in a situation, you see an emergency coming, then your goal should be to save up as much money as you can, because you can see the emergency in the future. Sometimes that emergency you see in the future, maybe you got a baby on the way, you probably want to not try to reduce a bunch of debt right now, but rather save up a lot of cash, because you see a baby coming on the way. So that's how I would respond to that. Okay? Yes, ma'am.
My question is, how does the IRS take a license fee that you would owe for your professional service, take that money and then project that you should have made a certain amount of money and then tax you on that money?
Okay, so here's my best shot at it, okay? If you are a professional in California, meaning you have a California license to do something, whether you're a beautician, a CPA, a contractor, you are not exempt from filing a tax return, even though ordinarily you would be. If you have a California license, and I have to do this with California, then what they will do, they will project based on all the other people with those licenses how much they've made, and then they will begin to put a certain dollar amount for you, just simply saying, this is what you made. Because you didn't, now I'm not saying this is your situation, but because you didn't file a tax return, we had to, and this is probably the wrong word, but it starts with the letter I, we had to interpolate how much money you made. Or we imputed how much money you made, and we charged you. So my advice is, always file a tax return, even if you don't think you have to file a tax. Ordinarily, if you wouldn't have to file a tax return, but you have a California license, file the tax return. Because when you got the license, in the paperwork, it said you would file a tax return no matter what. It's there somewhere in small writing. That's the best shot I got at that. But they do it, and I hate it. So always file the tax return. Yes, ma'am.
Yes, what's your position on reverse mortgages?
Okay, reverse mortgages should be a last resort, an absolute last resort to helping you get some money. And then you have to be careful of understanding all the rules for them. Number one, it's an expensive loan. Even if you never pay it back, it's an expensive loan. So, and whoever is left after you die and go away, if they don't want to repay the money, they don't get the house. All right? I've repaid a reverse mortgage when my dad passed away, and, just so I kept the house. But it's an expensive way to borrow money, a super expensive way, so it should be the last resort. And your children or whoever your heirs are, you need to let them know, hey, y'all not going to get this house when I die, okay? Because it's going to have a huge balance associated with it. Now, I have seen people get a reverse mortgage, take all the money, use it to live on, die. The other family members, they say, well, hey, just sell the house. Maybe we can get more than what's owed on it, and they'll get a little money that way, but it's not something you do lightly. It has to be the last resort. Finally, on this topic, what was I going to say? If you move out of the house and you have a reverse mortgage, all the money is due right away. So you can't move out. You can never move out. Otherwise, they'll come and take the house away. I think there are a couple of exceptions, like if you move into a senior care facility because you become ill or something like that, there might be an exception or two like that. But you can't just go live with your kids and they move into the house, or you can't switch places with your kids. When you move out, the reverse mortgage needs to be paid off right away, within 90 days. That's the rules. So, yeah. Yes, ma'am.
I had some work done on my home, and I went through, little did I know, that 360 Hero program, which put the payments
On your
once a
property
year
taxes.
on my taxes, property
Sure.
taxes. Now, my question is, I'm thinking about going to Capital One and getting that, I think it was 22,000, and from Capital One to pay it off. Should I do something like that? Because I don't need this, and I too am in that reverse mortgage. And I heard if you go in the hospital, and I'm 87, so any day now.
Okay.
But I need to know what to do. Should I go to Capital One to make sure that they don't?
So if you go to Capital One, and Capital One will go ahead and they're going to give you some money to pay off your Hero loan, is what you're saying?
Right, so it won't be on my property taxes.
Yeah.
That's the thing that's about, because if I don't pay the property,
If you don't pay your property taxes,
they gonna take the house anyway.
they take the house after 5 years of not paying your
Oh,
property
I
tax.
got a little-
Oh, you got 5 years, huh? Okay. Well, there you go.
Oh, I can make it.
And she was not the 80-year-old that I talked to earlier today at all. So you're looking good for 87, though. But that's my best shot for you. You got 5 years not to pay your property taxes before. I think you're going to make it 5 more years, though. With how you're looking now, you're going to
So should I
make it.
go to Capital One and let them pay it so this won't?
But you got to pay Capital One.
I know, but Capital One, see, I pay.
See, you're
I have
thinking
to
you're
pay
not going to
them
pay
by
Capital
the
One.
year.
You're going to have to pay somebody.
Okay, but I paid them by the year, and I have to come up with $3,000. It's
Okay.
hard. It's easy to pay 5 or 6.
You can do it with Capital One, but just know you're going to have to pay Capital One.
Yeah, I know.
Okay.
I might.
All right. There you go. Yeah. That 5-year rule. You're going to live. You're going to be around at least another 20. Yes.
Simple question. Normally, how much money, cash money, should you have on hand?
How much cash money should you have on
Roughly.
hand? It depends on who you are and what you got going on.
I'm retired, nothing going on, just
No.
living
I
good.
cannot answer that without asking you a whole bunch of questions. Because, look, you mean cash in the bank, right?
No, I mean cash in my
In your pocket.
in
Okay.
my pocket. 10%, 20%, 30, whatever.
Percentage? No. What do you got to do during the day? That's all you got to ask yourself. You need as much cash on hand as you think you're going to need during the day. Let me give you a good example.
Okay.
I know that once a week I fill up the cars with gas. I like to use cash for that just because my place I like to go charges extra if I use any other form of payment. So I have enough cash in the house that I can fill up the cars with gas every week. Walking around money, hey, what do I anticipate having to spend money on? Not a lot. I like to have it, today on the drive to coming here to church, I asked my daughter, I was like, you got your offering envelope filled out? She said, no, I didn't get any money. And so, I reached in my wallet, I pulled out a $10 bill. I didn't anticipate that, but I'm just saying it was good to have some cash on hand. But it depends on what you think you're going to be spending money on. Personally, I don't think people should walk around with a whole bunch of cash just for sake of it. I got buddies who still walk around with rolls of money with a rubber band around it, and that's just how they are. So you don't need all that.
I mean, that you have in your house, in your bank, and in your.
Well, you say it
safe or
on
something.
hand. So in the house, I keep enough so I can pay the gas that I'm going to put in the cars each week. I would tell you don't keep an exorbitant amount, thousands and thousands of dollars in your house in cash, unless you're pretty sure nobody's going to break in. And see, when I was growing up, nobody ever broke into my house when I was growing up. Okay, because I didn't have anything. They would have been practicing. That's all it was called, breaking into my house. You'd just be practicing. So don't give people a reason to break in. Now, I've recently, in the past 3 years, bought a big 75-inch, 80-inch screen TV. I'm wondering if somebody's ever going to break in to take that. That looks kind of strange, you walking down the street with a big old TV. But I'm just saying, that's the only thing I can think of value for people for me. Now, valuables and stuff like that, you know, some of y'all have jewelry. I mean, if that's valuable, if somebody break in and take that from you, be upset. Have a safe in your house. This is a small, heavy safe that you have hidden, not in the wall, just under the bed, in the middle of the bed. I don't know, but, you know, we've had a rash of break-ins around my house. So, you know, make sure the alarm is set and, you know, what? Somebody breaks in, they take something, okay, you know. I do have some stuff in the house that is valuable. I don't have it, I have, you know, I do poor man's protection of my stuff. So I have and I'm just saying this because I don't think you guys are going to break in or nobody listening, but by audio. But I have something very valuable, and people will see it and know it's valuable. So what do? I have a fake one sitting out where everyone can see it. So what do? You come in, you take the fake one because you thought it was valuable. The real one is hidden. I remember being here a long time. I remember there's a valuable painting that was put out on display. The artist made 2 of them. One was a practice run. The practice run was so nice. That's the one they showed everybody. The real one was never seen. It was a valuable piece of artwork here. And I was like, wow, look at that. No one ever saw the real one. Only the practice one. They couldn't tell the flaws in it. It was just for practice. Yeah. So that's my poor man's way of protecting stuff. Yes.
I have a niece that had a situation where she had her car repossessed. So how does that affect your credit long-term, short-term? How does that work?
Repossessions, bankruptcies, things of that nature, getting people to call the credit cards and work out credit card repayment plans for you. All of that can affect your credit report negatively for 7 to 13 years. 7 to 13 years before it all drops off. That's why when you stay up late at night, you hear about credit repair companies. That is just a little better than filing for bankruptcy, having them help you. A more effective thing to do is you call up the credit card company, you work out the payment plans with them. Okay? Let me give you one resource. If you need someone to help you with your credit repair or just, you know, or something like that, yeah. So here's what I want you to do. If you're struggling with debt, you need somebody to talk to really help you get your arms around things and what to do. There's one place that I would send people. It's the National Foundation for Credit Counseling. The National Foundation for Credit Counseling. There are a lot of companies that have similar titles, so I want to give you the website. The website is nfcc.org. nfcc.org. This is the only organization I would have help you with your plan, your game plan of getting out of debt or getting your credit back on track. Okay, nfcc.org. The National Foundation for Credit Counseling. There's so many companies that have similar titles that are just pointless. Yes?
I had a situation, and I think it's a scam. A person leaving a message on my phone about my Social Security number is linked to some fraud or something like that. Call
It's a
them
scam.
immediate.
It's a scam.
That's what I thought.
Yeah, it's a scam. I don't know how to prevent people from calling you. Just don't answer the phone for any numbers you don't recognize. Let them leave a message. I mean, I get the IRS, you owe the IRS a lot of money, we're going to come after you. I get those phone calls too. I get them as well. I get calls, hey, we're here to help you repair your credit. Click. All right, yes.
Same subject matter. I've gotten a few voicemails. This is Bill Alexander calling, and we have an urgent financial matter. We can come to your job and show up with a serve you.
Don't even bother. Don't lose sleep.
Should I submit a police report for
No,
this
don't bother.
nonsense?
Don't waste your time. Just don't answer the phone. Don't respond to the call. Don't lose sleep over it. Just don't. Notice this stuff didn't happen the way it's happening now until the internet and having everything automated. So I've had people call. I would have thought I was talking to a person, but I'm talking to a computer. It sounded so real. Just don't answer the phone. If you If you are looking out for a phone call, it's important. They will leave a message. It doesn't take any time to call back, okay? Just let them leave the message. I get those calls too. All right? Well, listen, I'll bring everything to a close today. You guys have been a wonderful group. Pay attention for the next financial workshop. I think it's in, is it August, September, or something like that. August or September, something like that. So you'll hear an announcement and be on the lookout for it, okay? All right, everybody.